Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's continue our discussion of the situation in euro currency on the dollar index. So yesterday we have talked about possible downward continuation due to the price action that we see on the dollar index, and the recent collapse was rather fast. But the major driving factor still was the tax bill, so it should pass through the Senate and Congress. So and this has happened. And some technical vote still remain till the Christmas holidays, and probably will take part today. So also today will be, as you know, the Bank of Japan meeting, so maybe some volatility will appear on the market. But currently, guys, it's a lot of noise in the price action, and even clear patterns right now looks not very attractive. So we still think that here downward action is more probable despite the recent voting, and it's probably the advantage for the dollar that should appear on the tax bill passing through the Senate, because, guys, technically here we need to return back to the weekly chart of the dollar index. So if you will take a look at the weekly chart, you will see that actually that's move up is the first one after the long lasting collapse on the market. Actually, it has started in 2016 here, and it lasts through the whole year, and that was just minor retracement up. In fact, in this upward action, we have some kind of the bread and butter sell look-alike pattern. I would call it as the perfect bread and butter if market would test this resistance within the 3 closing about the moving average, 3x3 moving average. So, but this has happened on the 5th close, 5th close. The first, second, third, fourth, and the 5th close, market has reached the fib level. So, but the idea of the momentum trade of the existing of the bearish impulse that stands with this collapse doesn't disappear, so it's still here. That's why this previous bearish momentum will press on the market. And that retracement that we see right now, some minor return right back down, is too small for action after this drop. So it means that from the market mechanics on the weekly chart, it suggests some deeper action, at least to the 618 support. I will not be surprised if we will see it dropping right back down to the previous lows or slightly higher, but at least the 618, it will be minimal requirement action, and market hasn't quite reached it yet. That's why, based on the picture that we see here, it is suggest that market really should move slightly lower. That's why on the daily chart, guys, we mostly continue to talk about this, some kind of the hand shoulders, although the appearing of this pattern is not typical for this for it, since it should appear on the tops on some major momentum, major reversal moments on the market. But here we see it in the retracement. But still, we have the shape of the hand shoulders. That's why we call it as the hand shoulders pattern. So right now, market stands at the support line, but still, as we said, it's probably downward action here is possible. Technically, because market still stands below this top, and remember our recent discussion, we said that these hand shoulders could be erased only if market will move above this top, will move above the top of the right shoulder again. In this case, the hand shoulders will be under question, but right now market stands rather well. It doesn't hurry to the downside, but still, taking into consideration the overall environment where the market stands, it's just 2 days to the holiday, it's understandable action. That's why on the 4-hour time frame chart, we approximately expect something of that sort. So actually what we have, right on the slope of this head, we've got this triple two sell pattern. So market has collapsed. Here we've got even minor pattern. Also was guarded triple two sell. Take a look at the shape of the hand shoulders pattern that was in the December contract. Right now we are talking on the March contract. This is the futures on the dollar index. That's why the shape of the chart could be different. This significantly has changed the shape of the chart, so we do not see clear here the bullish hand shoulder. So that should be left shoulder. Yesterday it was in this place. Now it has shifted up, and overall shape of this hand shoulders has been skewed by the turning to the March contract. This is actually normal for futures. And at the target to the downside, speaking on this head and shoulders pattern that we have here, I think that we could talk about 92.30 area, so depending on the target that you will use here. It's approximately destination point. This is at least destination point for retracement. This approximately will be 618 support on the daily chart. We have here, based on the hand and shoulders, A, B, C, top, minor contraction objective point, COP target. This is 618 extension. And this butterfly. So 127 extension stands 9204. It's right here. But if you use the butterfly, not from this low, but for example from that low, it's minor butterfly. In this case, you will get target even higher, around 9230. So somewhere around 9215, let's take in the middle of this range. This will be minimal destination point. But I will not be surprised the market indeed will show some downward continuation later to the previous lows, because overall situation on the weekly chart suggests some deep retracement. So let's keep watching. Major points, of course, will be the extreme points here and here. The breakout will be very important. So if market still will show upward breakout here and taken out of this top, so it'll be negative sign for these head and shoulders. But in turn, if market will drop and taking out of these lows, that will be the confirmation of the idea that we have. But currently, technical picture looks so that advantage stands on the bearish side. So based on the picture that we see on the weekly time frame.